Is this the wrong time to buy your next home or investment property? Currently there's lots of uncertainty surrounding our property markets. A lot of it's related to the upcoming federal election and what the Labor Party's policies are going to be, how they're going to affect our housing markets. So it's understandable there are some home buyers and some investors considering putting off their investment decisions or their purchasing decisions. They're wanting to hold off until after the election. But is that a smart strategy? So I'd like to maybe look at this with some questions and answers. Let's start with what are the proposed changes that all these people are worried about. If elected, the Labor Party plans to stop negative gearing on established properties bought after July 1st, 2017. They also intend to increase capital gains tax payable on the sale of any investment property, either established or new, and bought after July 1st, 2017. They're going to increase it from the current rate of 50% to 75% of any capital gains accrued when the property is sold. So what's the thinking behind this? The opposition says it intends to increase housing supply because it's concerned about housing affordability. On the other hand, a cynic might suggest the real objective is to raise additional tax revenue and save the budget the proposed $32 billion of tax over the next decade. So will removing negative gearing really increase affordability? I can't see how, as affordability is affected by house prices and wages growth, which affects how much the banks are going to lend you. There's nothing in either party's policies that's likely to improve wages growth or increase affordability. So to make housing more affordable for first-time buyers, Labor's going to have to either disenfranchise over 7 million current homeowners and reduce the value of their homes to appease a small group of aspiring first-home buyers, or they're going to have to get us somehow or other to build more affordable properties, but these are likely to be in areas where first-home buyers don't want to live. You know, in the outer new suburbs, far away from where all the amenities and where all the action is, or in motel-style rooms in high-rise monoliths in the CBD. Now don't think me harsh, with 6 children and 8 grandchildren, many still working their way into the property market, I understand the difficulty first-home buyers are getting in the current market. I'm just saying that removing negative gearing isn't the answer. What will happen to property if Labor wins? Well, it's likely we're going to see a mini boom in established properties as investors are going to bring forward their demand and purchase before the new legislation takes place in July 2017. This is likely to be followed by a lull as demand falls. Now, we've seen much the same occur when end dates were set for stamp duty concessions to end, or when first homeowner grants were announced and then there was an end date for those as well. But at the same time, I think the property development industry is going to ramp up supply. But if history repeats itself, and it most likely will, the effects will be that developers are going to just be overzealous and deliver too many new dwellings, and many investors are going to get burned as they buy new high-rise apartments in our CBDs or new house and land packages in the new outer suburbs. They're going to naively believe these are going to make good investments. Unfortunately, many are going to suffer the same fate the majority of investors in these specific submarkets have endured in the past. They're going to have no scarcity, low capital growth, low lack of rental returns. The problem is some disenchanted investors are going to try and sell up. But they're also going to lose out as they're now going to be selling second-hand properties, and they're going to find the value of their properties have fallen. They're going to probably have fallen significantly in some cases, as now only owner-occupiers and not investors are going to be interested in them. But even worse, young homeowners, owner-occupiers who own houses in the same new estates where the investors do, they're going to find the value of their homes are also going to be decimated by the lower prices achieved by those investors who just have to sell up. So what should a property investor do? Now, just to make things clear, this isn't meant to be a political monologue. These are just my thoughts based on investing through numerous tax changes over the years. I was an active investor when, in the 1980s, negative gearing was removed, and that caused a rise in the short term in rentals. I was an investor in 1985 when the introduction of capital gains tax was going to decimate property. It didn't. In July 2000, I was investing when the introduction of GST was going to stifle the new home market because the tax didn't apply to established properties, only to new properties. I've been investing through various increases in stamp duty rates and multiple introductions and removals of first home buyer grants. My recommendation is this isn't the time to panic or make rash emotional decisions. Instead, it's a time to learn from history and remember that while all of the changes that I just discussed a moment ago supposedly were going to seriously impact our property market's performance, look, while they were caused some short-term uncertainty, they did little to halt the relentless rise in the value of well-located properties in our major capital cities. History's also shown us that investors who chase tax incentives like negative gearing or chase the next fad or the next hotspot tend to lose out. But those who remain focused on accruing quality capital city properties and holding them for the long term, they're the ones that tend to thrive. In my mind, the markets are creating a window of opportunity for those ready to take advantage of the upcoming lull, either to find their next home or their next investment property. But isn't it too late to get into this property cycle, some people are asking? Well, sure, at a more mature stage of the property cycle, but it's likely that all our capital city markets are going to end up higher at the end of this year than they are now, driven by slow but steady economic growth, mild wages growth, population growth, even though it's slowing a bit, falling interest rates and rising consumer confidence. That's particularly going to happen after the election. So if you've got the means to buy your next home or investment property now, it could well be the right time to do it, rather than putting off a decision for after the election, waiting a couple of months till all the dust settles, because the result of all the upcoming election changes are unlikely to matter anywhere near as much as the politicians would like us to think they will. However, at this stage of the property cycle, where not all properties are going to increase in value and where clearly the market's going to slow down, correct property selection is critical. So if you're looking for independent advice, no one can quite help you like the independent team at Metropole Property Investment Strategists. The award-winning team have offices in Melbourne, Sydney and Brisbane, but no properties for sale, so their advice will be unbiased. Why don't you have a chat with us if you're looking to get into property, or if you're wanting to have your current portfolio reviewed to see how it's performing? Why not get in contact with us, and we look forward to being part of your wealth creation journey.